our portfolio had actually been brought through estate agents. We had no property investment background, so we were very open to all the strategies that were being taught. By accident, we actually got into HMOs, and actually we brought his portfolio one property a year just through 100% vendor financing.
Hello and welcome to the latest interview from our 100K Club series. And this is really for people who have been able to build up an income in excess of £100,000 of profit from their property portfolio and property activity. And I'm really delighted to have Tushar Shah with me today. Tushar, how are you?
Yeah, I'm really good, and thanks for having me, Simon.
Fantastic. Well, thank you so much. I know you're pretty business with your number of different businesses, but let's start there actually. So tell me a little bit about you and your background, please, Tushar.
Yeah. So my name's Tushar. I'm a co-director and co-founder of Centrum Group, which I run with my brother-in-law, Mehul Shah. We run a number of companies, primarily in healthcare. So we run care homes and domiciliary care. But we also have a property portfolio and property development business as well within the group. Yeah.
And so tell me, so you were mainly in that kind of that healthcare business before property. What was it that really got you into property investing and made you want to come and join Accelerated Their Mastermind?
Yeah, so both Mel and I had corporate backgrounds, and around 2008, we decided we wanted to start, become self-employed and become our own business owners. And our first business was actually in photography. And it was a time when film was sort of dying down and digital was just starting off. And we really captured that wave of digital photography. And we managed to secure the high-end Asian wedding market. And one of the things that whenever we would go to these weddings, we would always be interested in how the families generated their wealth, and we'd speak to the parents. And one of the key things that they'd always say is, look, you need to have a business that runs without you, and then any profits you make sure you invest it in property. And it was a clear trait that we were seeing all along. And I just remember a conversation with one of the father of their brides, and he started off from a corner shop in Brixton and had built up quite a substantial property portfolio and businesses, and it was quite inspiring. And those was one of the conversations that resonated with us. So I think once the businesses started really building momentum and we started having some extra cash flow or profit at the end of the year, we said, right, we'd like to invest in property. And one of the things we thought was, rather than just going out and buying property, we thought we'd take the time to really learn how to do it in a smart and an effective way. And hence the reason we joined the Mastermind program in 2011.
Fantastic. And so when you joined Mastermind, what was your strategy and where were you kind of investing?
So it was obviously we had no property investment background, so we were very open to all the strategies that were being taught. And around 2011, by accident, we actually got into HMOs. And they were primarily in Birmingham. I'm originally from Birmingham, so I knew the areas, and it was a lot cheaper than Reading, where I lived, where the property prices were effectively double the value at that moment in time. So we thought Birmingham would be a good a place to start. And I think I actually brought a lease option from yourself, and we brought another deal from another masterminder. And then from that, we started focusing on a specific area, which is primarily Edgbaston in Birmingham. And we did a number of deals, and most of our portfolio of HMOs are around the Edgbaston area in Birmingham.
Yes, yeah. But also your HMOs there, but then obviously you've diversified onto commercial property. You've got quite a few developments you've done actually in Reading, haven't you?
Yeah, that's right. We were doing HMOs in Birmingham, and during Mastermind, we were actually just buying repossessed single lets in Reading. We were getting roughly around 15 to 20% discount. So it wasn't technically the 25% discount, but actually it didn't really matter because Reading's in the southeast, and very quickly it recovered, and we saw capital appreciation. And in about a couple of years, about 4 years after completing Mastermind, we built up quite a good portfolio of HMOs using joint venture funding and investor funding. And we really started moving into developments. And that really started allowing us to develop extra cash flow and looking at much more bigger deals, buying blocks of flats, commercial units. and properties that we could really add value and pull out most of our capital.
Yeah, so you're using momentum investing where you're buying at a good price, adding
Yeah.
value through renovation, then refinancing, taking the most cash out, which is a common theme many of our 100K Club interviewees have actually shared, and that's a key way of quickly building their portfolio. So let's talk about actual finding deals for a minute. And I know you've had a slightly different creative view. So how have you found most of your really good deals?
So the majority of our portfolio have actually been brought through estate agents. We were very busy running our businesses, so we didn't really have time to do the sourcing and trying to find people to take deals. And what we did was, because we had our business, effectively we had credibility. If they were asking for proof of funds, we could show that very quickly and really develop that. So initially, a lot of our deals came through estate agents, and that's where we brought a lot of our deals. And what they really liked was that we were able to transact very quickly and get things completed.
Yeah.
But also, as a result of that, we also started speaking to landlords who were offloading their portfolios. And what we did was follow up with them afterwards, send them a letter saying, thank you for working with us on selling your property. If you have any other properties, or you know of anyone else wanting to sell their properties, please come contact us. And one of those individuals actually got in touch with us. And actually, we brought his portfolio one property a year just through 100% vendor financing, because we developed a very strong relationship where he trusted us, and he became the bank. We'd buy his properties, which were very rundown HMOs, refurbish them. He would just want 6% interest, which was quite great, which back in 2013 was the general rate for HMOs anyway. And 12 months later, the properties would be valued at least 30% more, because they'd been done to a high standard. The cash flow had increased significantly because we moved away from, say, housing benefit tenants to professional tenants, and they were in good locations. So we were able to recycle a lot of our money out, etc. So that really started giving us a lot of confidence, and then we started looking at other deals such as development deals, and that was something that we really started working on from 2014, 2015 onwards.
Yeah, and you found some through agents, but also you found some off-market deals, didn't you? By just looking for local businesses and knocking on doors and finding people who were interested in selling, right?
Yes, that's right. Yeah, I mean, I think sometimes you'd find derelict properties or various sites that were just sat there, and you'd speak to people and say, what's going on? And you'd find various sites like that. So there was a site in Newbury, which was an MOT station that was on a beautiful road, and we contacted them, and they were retiring and they were actually looking to exit. There wasn't really a market for MOT testing. The business had been up for sale for 2 years and it wasn't really moving in the right direction. So we struck a deal with them to really see what planning we could get on the site and move it forward. But I think the one thing that we also learned was doing the due diligence, and being very clear on, making sure you were trying to find whatever you were buying, you knew what the end value was roughly going to be, and what the costs were going to be, and did the sums stack up. And I think one of our best deals was actually through an auction. Now, normally I never buy from auction. It's something that for some reason we've never really explored.
Yeah, well, we don't really teach auctions because I think people overpay. The only time we should buy is kind of post-auction, right?
Exactly. And we'd started looking at auctions for development sites. And this is just as we're starting our journey. And I know many people say with development, the profit is made in the planning stage. And I suspect that's correct. But to get to that profit takes a lot of effort and work, finding the sites, negotiating the deals, getting the planning. And we came across a site that was in auction in Reading. It was an office that had planning permission for 4 one-bedroom flats. And when we looked at it, we thought it was a really great site. It was a reasonable price. Planning was in place, and we thought this would be a great deal for us to really start learning, and it would be very low risk because we knew the area and we knew it would sell. But when we did our due diligence, we paid £500 for a solicitor to do a legal pack for us and say were there any problems with this. And he goes, yeah, it's all fine apart from one thing. And he goes, this could be tricky for you, is that there's a restrictive covenant that prevents the office being used for residential use.
Bit of a problem.
Yeah, exactly. So it was being marketed as a development opportunity to 4 flats, and we worked out our sums that this would probably be worth doing at about 450, 465. And in the end, it sold at auction for about £500,000.
Yeah.
And like with everything, what we learned is a deal's only done until it's completed.
Yeah.
So, we were sitting there having a coffee, and I saw the person who'd brought the property, and I went over to him and said, "Look, congratulations, well done on buying the property. What's your plans for it?" And he goes, "Well, I'm going to use it for my business, but I'm looking to plan and convert the upstairs into a flat." And I go, "Oh, that's fantastic. If ever you're looking to sell and you're interested in that, here's my card. Give me a shout." And actually, I said to him, "You do realize there's some legal challenges?" Because, "Yeah, no, that's fine. I'm using it for businesses. I know that." But I actually forwarded him my legal pack because he hadn't done his due diligence. He just read the title and thought he knew what he was doing. Unfortunately, he was unable to complete on the property, and I got a phone call on Good Friday in April 2014 saying to me, "Would you like to buy this property for me?" And I said, "Well, why is that problem?" And he explained that he couldn't get funding on it. And I said, "Look, let's try and help you." And I introduced him to a few of my brokers. But I think because of the pain, the pressure, he realized that what he anticipated this property to do for him, it wasn't going to be a reality. It was costing him more in interest, became very painful. Look, I just want the deal to, take the deal off my hand. And what we said was, look, what we'll do is let's try and explore it. Let's get the restricted covenant removed. But in the end, he said, "Look, I just want to walk away from this deal." So we went back to the vendor and we agreed to exchange contracts subject to us removing the restricted covenant. And what we knew was that it was very easy because it was in the neighbour's favour. The restrictive covenant was in the favour of the neighbour. And we just knocked on their door, had a chat with them, a lovely elderly couple. And we said, "Look, this needs to be removed." And we agreed to pay them £10,000 to get it removed. And they were happy to do that. Unfortunately, it took 12 months to do, which was a bit painful for the owner. But it worked in our favour because during that time, we were able to go in and change the planning to make it into 3 two-bedroom flats and one bedroom flat. And so giving it up development uplift. And we were also able to get builders to contract and negotiate the prices on. So the minute we completed, we were ready to develop the site. So effectively, we'd only put down after the £520,000 on exchange of contracts. And we had 12 months to get everything lined up. And we only had to fund the whole deal for 9 months until we completed and sold all the flats. Fantastic. So it was a very good deal for us.
Fantastic. And again, there's a couple of things that I pull out from that because I want to make sure people get loads of golden nuggets from these interviews. And that's, first of all, having some specialist knowledge and awareness that maybe most people might miss, but also really looking for that win-win. I love the fact you went to the guy, say, when he came to you, "Hey, look, can we help you? Can we help you see if we can introduce some people to get to finance?" And if you genuinely try and help people and you put them first, I think they pick up on that and they're far more willing to work with you and do something with you if that's not a solution. The fact you were trying to make them aware of those solutions, you're not trying to trick them or anything, you're trying to help them, and they realize that and say, "Actually, I want to work with you," and obviously you picked up a great deal.
Yeah, and I think that was something that we always want to invest with our values, and I think that's really important in this situation. We knew that this site had problems on it, but they were could easily be overcome with the right knowledge and the right approach. And when we approached this individual, we said, look, we gave him our legal due diligence and said, have it for free because it's of no use to us. And literally 4 weeks later on Good Friday, I still remember that day clearly, he called and he said, "Look, I'm really struggling with this. Do you want to take the site from me? And I'm happy to give you a discount." But unfortunately, he'd already overpaid for it anyway.
Yeah. And also the fact that you just even went up to him on a speculative way saying, "Look, here's my card. If you're interested in selling, get in touch with me." Most people would think, "Oh no, he's bought it now. There's no possibility there." And I think just putting yourself out there and telling everyone what you do and talking to people and sharing your contact details, if you do that enough, occasionally deals are going to come back to you, aren't they?
Yeah, and it's a numbers game. When we're looking at estate agents, we know that 99% of the offers that we make are just going to be rejected. But there's that 1% that they will come to us, and the minute that they know that you can transact on a deal very quickly and very fast, and they know that you're looking for a 20 to 25% discount, they will always bring those deals to you because they want to get it off their table because that deal has fallen through and the vendor's going to pull it and give it to another agent. So that's what we've really worked with, and we've taken that across all our deals, and it really works really well for us to get good deals without very minimal effort.
And you're right. So some real learning points there about getting into that black book, because actually it's not just about you making money. You're helping that agent, because if a sale's falling through, which might be the fault of the agent, but often it's not the fault of the agent at all. The owner doesn't feel like that. They think they've been let down and they get frustrated and want to, oh, I'll take it to another agent who says they can get me a sale and more money. So the agent doesn't want that to happen because they're going to lose their commission. So actually you're kind of like agent fee insurance, aren't you? You're kind of stepping in to get the deals done. They know that you will deliver, and being able to move quickly, being decisive is a really important skill, I think, because when you have a good deal, you've got to move quick, right?
Yes, exactly. Yeah. And I think the other thing also is that landlords are always, when landlords are selling, they always know that when people are putting these funny deals to them, they're not really warm to it because they've probably acquired their portfolio through this way. Whereas when an agent knows as a landlord, if they have trust in you and know that you can build a rapport, build a relationship up with the landlord, and you'll transact in a way that's timely for both parties, they're open to introducing you so that you can find the win-win deals, whether that's an exchange and delayed completion, whether it's a straightforward deal but at a discount, or these different options they're open to introducing you to these opportunities.
Fantastic. So let's talk a little bit about how you funded some of your deals. And you mentioned you've done some vendor finance. And again, this is something that many people might have heard of, but may not believe is actually possible, or people would want to do it. Let's talk a little bit about that. I know you've used some of your own money from your business. You've raised private finance. You've done purchase lease options. But let's talk a little bit about this vendor finance and how that worked.
Yeah. So vendor finance is effectively when you buy a normal property, you're putting a 25% deposit down, and then the bank's funding the rest of the monies for the property. The deal that we had was, again, it was another special day, 24th of December 2011. We just completed a 1 HMO, and we saw that this property opposite was up for sale. We'd contacted the agent, and he goes, I don't do the viewings, it's going to be the landlord that will do the viewing. And this property was a 6-bed HMO, which hadn't been refurbished since 1970s or 1980s. The carpets were still there. It had the old chipboard, and it was a very clearly old property. And the landlord, unfortunately, had a heart attack, and he was really looking to offload his portfolio. And for 1 hour, I just spoke to him about his property journey, and it was an amazing journey. And I said to him, why do your children not want to take over your portfolio? Because they're just not interested. They would just like the money. I said, look, I love your property. I love your property. I think it fits our strategy. I actually took him across the road and showed him what we'd done with the HMO across the road, and he loved it. He thought we'd spent too much money refurbishing it because he was very much keeping it very low cost and low value, and ours was about good furnishing and attracting professional tenants. But over a couple of months, we developed a very good relationship. We used to meet regularly for coffees, and we were trying to get financing on this deal. But this was 2011, and financing for HMOs was very challenging, especially for first-time landlords. And what he turned around and said to us was, look, I like you guys. I trust you. You've always said, every time you said you were going to do something, you've always done it. You've kept me updated. He goes, normally when I sell the property, I sell it, and then I put the money into a bond to pay for my capital gains, because at that time there was he was getting about 6% interest on the bonds. So I said to him, well, why don't you do this? Why don't we exchange contracts, and we'll give you, we'll pay you 6%. We'll refurbish the property. So we're going to be investing our own capital into it. I showed him the quotes that we had got for the works and their drawings, and he was quite excited by all of this. And he goes, yep, that's fine. And then it came to exchanging contracts, and for some bizarre reason, he trusted us so much, he actually instructed his solicitor to complete and put a first charge on his property. So effectively, he became the bank. So vendor finance is where the owner becomes the bank. He had no mortgage on it, and he said to us, I'm going to give you this, and you pay me 6% of the sell price per annum. So that's what we did. So he gave his, the next day our builders went in. 6 months later, it was all finished. He loved the finishing. And it got valued. I think we brought it for 195,000. We spent 60,000 refurbishing it, and it got valued up at 325. So we had to leave a bit of capital in, but we got most of our money out of that. And he got the money back. And he was actually saying, "You don't need to refinance it. Just keep it. And I'm happy to leave it there for another 5 years." But we wanted to give him that money back to give proof to him that what we said and committed to doing, because we said we'll give him the money back within 12 months. We kept our word to it. And ever since then, he's been really happy. And every year he'll give us one of his properties to do the same deal, because it helps him from a tax perspective to spread out the disposal of his portfolio. So that's been a really good deal. So again, a very win-win situation, thinking creatively, helping him find solutions, but him also helping us to build up our portfolio.
And also, it's a big tip we share with our students, which is whenever you find someone who's selling a property, always ask them that question: do you have any other properties? And if you find a landlord like that, that's just a whole pipeline of potential. If you do a good job, do what you say you're going to do, as I know you do, who knows where it can go.
Yeah, exactly. Yeah.
Fantastic. So if we were going to share some tips, you give them lots of tips anyway, but if you had a few tips to give people who like you were, successful entrepreneurs, but busy, and they wanted to have some extra income coming in from doing property, what would some of the tips be that you'd give to other people so they could replicate your success?
Yeah. So we get this question asked quite a few times, and I think there's different ways of approaching it. But I think the way I would look at it is given an analogy. It's a bit like Monopoly. I think the end game that all property investors want to do is to get onto Mayfair or Park Lane. But if you go and buy Mayfair and Park Lane from day one, you're probably going to blow all your cash, and you're hoping for luck for somebody to land on it. And the reality is the probability of somebody landing on that within the first 2 rounds is very low. And so my approach to everybody is, and it's a bit also like when you're buying Monopoly, the person who just buys every card they land on runs out of cash very quickly and has no real structure, no real strategy, and then ends up having to sell their cards very cheaply to somebody who's been a bit more strategic and a bit more clever. So I always say is, depending on where you are, start off small, but be consistent in your approach. Whether it's buying the brand, the pink or the blues initially, at least they're a lot cheaper. Learn the business, learn the trade, develop your skill set, and try and stay within a specific geographical location. We were very clear: Birmingham and Reading were our 2 locations, and we run multiple businesses. And the reason Birmingham has worked for us is because we built our own team that managed that property. Our whole portfolio, both Mel and I probably spending a combined 1 hour each a week managing this portfolio. So it really is, I wouldn't say it's passive income, but I would say it's as passive as it's going to be in terms of, based on the profit levels that we're making, that's a really good return on our time invested. So I really would say that. So I say develop the Monopoly strategy, focus on where you are, what cash you have, and build in specific areas, build that portfolio. And then once you get the experience, you move from a group of houses to hotels. And a bit like the chance and community, you're going to get some good days where you can pull all your money out. There'll be days where you get put to a couple of fines. There's going to be lots of challenge. Learn from that. Every challenge is going to be your opportunity to become a better investor. And the deals that you don't do are the deals that you need to ask yourself, why did you not do that? Was there a reason? Did you not have your investors lined up? Did you not act quickly with your legal due diligence? Was it too big? Was it too small? Understand what it was, and really start developing some rules and principles that will help you make your investment. So for me personally, and for us, looking at a HMO or a block of flats, we could analyze a deal within 10 minutes without having to do extensive spreadsheets, because we've built that knowledge and that know-how. So, over the last couple of years, there's been lots of fantastic strategies that have come onto the property market, whether that's commercial, whether that's serviced accommodation. But we've been very focused. We do HMOs and blocks of flats. That's what we do. That's our bread and butter. And if the deal fits our strategy, we'll do it. And even in the last 12 months, we've been looking to expand our portfolio. And we've been very clear that we will only buy a HMO that has a 12% yield. And as you know, in Birmingham, we've got Article 4 coming in place. Yeah. And you were seeing deals going for 10%, 9%, 8%. And actually, I just felt that although we could afford it, it just didn't fit our investment criteria. So we had to be disciplined enough to say no right now. And I think, over the next couple of months, I think there's going to be some really good deals coming onto the market that will be at a price that meets our principles and our guidelines. So we'll be able to grow our profitable, our portfolio in a sustainable and manageable way.
Absolutely. Excellent. And the final question for me is, this whole kind of experience of getting into property. You still got other businesses, obviously, but getting into property and getting this income coming in, significant income. What's this done for you? How's it changed your life?
Yeah, I mean, it's changed it for the better. And I'm not just talking about from a financial perspective. I think going through Mastermind, what we learned is actually the biggest investment you can make in anything is yourself, and really investing in yourself, learning the knowledge, learning from others and from other people's experiences and their journeys. And I think that's really important. But I think, again, like with everything, you've got to keep it continual. The minute Melville and I stopped investing in ourselves, we plateaued and we stopped moving forward. And whenever we set ourselves goals, committed to learning new skills or developing our businesses, we've actually moved forward. And I think that was probably one of the biggest benefits I've learned from this in my journey of investing in property. But I think on a personal level, it's made a huge difference. Our property income is substantial. It allows us to really do things that, allows us to have the holidays and experiences that we want. But actually, for us, the cash flow that we have from our property business is actually cash flow that we can do to invest in much more riskier businesses or more interesting projects and business developments, knowing that if that business fails or that investment fails, the following year we're going to have that cash flow again. And it gives me that security and that sense, well, I'm not I'm going to get that cash flow again. So next year I can start again. And I think that's a real powerful thing, because most businesses, that recurring income can vary. And I think property is very stable. Well, yeah, you've got some challenges like the current crisis, but every business has been impacted. I don't think any business will not have been impacted by that. But I think it has allowed us to really take more calculated risks and really come out of our comfort zone and grow in ways that probably without the portfolio and the cash flow that it generates, we wouldn't have that confidence to do that.
Absolutely. Tushar, it's been fantastic. I'm really impressed with the way you've come on, and despite having a really busy business, you really embraced the mastermind. You took massive action. You trusted the process. You're very clear on your area, very focused, and that got great results. So thank you so much for sharing today. I'm sure people have found it really inspirational. So loads of great golden nuggets in there. And best of luck, and keep in touch. I'll speak to you soon. So thank you very much.
Thank you very much, Simon. Really appreciate it.
Thank you.